A healthy correction or the start of a new bear market. In the S&P 500 today, the only green sector is healthcare. Everything else is bleeding in red. Tesla is down 8% today. Everything is bleeding. So some stocks are already in correction. That means they're down like 10%, like Nvidia. And these are all leaders in the entire stock market. Let's look at the world. So in the whole world stock market, everything is red. Everything is really red, and there's barely any green. So what does this mean? Let's look at our stocks today. So High Tide is our least down stock, and it is my biggest position. And they just announced 2 new store openings today, so that's fantastic. But if we look, everything else is super red. I mean, SoFi is down 8%. I mean, we're still up huge in the last couple of months, so this is really not so surprising. If you're new to the stock market, then maybe it is, but for anybody who's been following, who's been buying stocks, this is normal, right? Especially with these stocks that have run up so much, they're just giving back some gains, and this is completely normal. As long as you're holding quality companies, this is a macro environment kind of situation. I mean, we had the Fed announce they're cutting 0.25 basis points of their rate, but definitely not a good outlook for 2025. They went from 3 rate cuts, now they're only projecting 2 rate cuts. So that is pretty concerning. VIX is up huge. I mean, VIX just spiked up. Don't know if we're going to see this level this time, but it's definitely much higher. And look at QQQ, down 3.5%, S&P 500 down 3%, SCHD down 2.5%. Everything is just bleeding. It is horrible. Bitcoin is still over 100,000, but we'll see how that follows. Yeah, it's just really interesting to see. I mean, I'm glad I have 50% of my portfolio in cash. Kind of not willingly, because I'm waiting for Fidelity to settle my funds over there, which will be available in January, since I recently moved to Fidelity. Half of my portfolio, which was in cash. But seeing days like this does make me happy that I do have some dry powder, and I can start doing cash secured puts, right? Because if the price is going down, we can see that. Let's just look at HIMS. I mean, oh boy, look at these premiums. So for HIMS, if you want to sell, let's take a look. $25. Let's say that you have a high conviction in HIMS that they're gonna do well long term, right? You want to buy shares at 25. Let's see how much you can get for that. You can do 0.5 divided by 25. In 2 days, you can get 2% return. That's insane. I mean, HIMS is on another level with these premiums. If you do $27, 1.05, that's double. But yeah, I would definitely, whenever we're in a downtrend, in a bear market, I would definitely go a lower delta, because you really don't want to be catching any falling knives. You don't want to be bag holding, because primarily your portfolio should be very well diversified. You should have a good risk tolerance and management, so you shouldn't be over invested in certain sectors or certain stocks, in my opinion. Obviously, for some people, it works out well when they're super concentrated. But for me, I just like to have that level of risk aversion. And selling lower delta puts gives you that extra income. And also, it's a way to hedge, right? You get to make some income while the stocks are going down. So I wouldn't sell, really far out, because if you look, it's not even worth it. Let's say 30 days, right? You do get a lot more premium, but you have to annualize the rate that you're going to get if you sell these lower date to expiry options. So yeah, we can see that it's down a lot, so these premiums have just shot up. So definitely watch these if you want to sell cash secured puts. this is a great time to, start researching it, start taking a look at it. Let's look at SoFi actually. SoFi is another stock that's down 8% today. Yeah, definitely today is not that good. I mean, it really depends on the stock, right? Depends on how much volume there is, all that kind of stuff. But yeah, HIMS is just on another level with these puts. So just a reminder that if you're looking at your portfolio, you're looking at your stocks, you're saying, oh man, I shouldn't have bought, or oh man, I should have sold, then just look at the whole world. I mean, it's a macro environment kind of thing. It's a timing kind of thing. You don't want to try to time your stocks, right? You want to be in quality companies and consistently invest. So it's some of these things are out of your control, right? What you can't control is your risk management, right? How much money you allocate to different stocks, different sectors, and the research that you put into these companies that will grow over time, right? No matter what's going on, over time, your companies should be doing better and better. So these are just short-term kind of macro environment things that are going to affect your stock prices, and you just have to stomach that. It's very normal. Things don't go up all the time. I mean, in 2022, 2023, all my stocks were going down every single day. I mean, it was red every single day. And most of this year, towards the last half of this year, everything was green. Everything was green every single day. And I was just counting my cash, just like, so it really depends on the market. You just have to stomach the downturns and consistently buy. So just a little reminder. So something funny is on YouTube, I've seen these videos of some YouTubers saying like, buy leaps in Tesla right now, buy calls, and Tesla's going to 500 in the next 2 months or something like that. And it's pretty funny because that's when you know that something has topped. I mean, once you go all in, once you start getting on margin and you're buying calls, buying leaps, like, yeah, it's especially after everything's gone up. Tesla's up 100+% this year, and you just have to kind of look back and say, okay, historically, when that kind of euphoria comes, that's when the market has topped. And I'm not saying that it's topped, for the next 3, 4, 5 years. Maybe it has. Maybe we are going to stagnate or be in a downtrend for the short term. But you always have to be very careful with what you hear, especially on the internet. People will say things like, oh, Tesla's going to $500 next. It's going to be $500 in January, $600 in May. Just take everything with a grain of salt. Don't bet all your money on it. Sometimes they're going to be right, sometimes they're not going to be right, and you just have to manage your money well. So one last thing that I will say is that with federal interest rates staying very steady and not dropping as much as we had hoped for in 2025, it's not going to look good for stock prices in the short term. Investors are not going to like that, and that's honestly something that we're going to have to deal with to fight inflation, right? Inflation is super sticky. It's been above the 2% target for a really long time, and we're just hoping to get it back down, right, to a manageable spot, and it doesn't seem like it's doing that. So yeah, that's the only thing the Fed can do at this point, is just kind of hold steady, see how things go, how the numbers come, and hopefully things do get better. Another thing to think about is that with the rates staying up, and that's gonna mean that high yield savings accounts, right, treasuries, CDs, they're gonna keep paying a nice risk-free rate, above 3%, 3 to 4%, and that's gonna keep people putting their money in those accounts, right? They're not going to be investing it in the market, because 3 to 4% is not bad. Most dividend yields are, with dividend stocks are 3 to 4%, and you can just get that risk-free in your savings account. So you might as well, right? That's going to be what most people are thinking about, and that's money that's not going into stocks and equities. So, that's another thing that investors are thinking about right now. All of these factors are just coming into play and driving stocks down. So overall, I'm glad to have my cash position, and you should invest according to your risk tolerance. Never over leverage. Even if the market is just ripping, people are printing free money. That's all you see on social media, on YouTube. That's it's not good to chase those kind of gains, right? You want to have a balanced approach, do your research, and invest carefully and safely, right? So anyways, hope you guys have a good day, and I will see you guys next time. Bye.